And I want to introduce you to the presenters today. From Comerica Bank, they are our partners. We have Michael, who's Assistant Vice President of External Affairs. And also we have Marci. She's the Vice President of Business Banking. And we're going to talk about balance sheets, and clearly understanding them can be quite the challenge. So that is our webinar today. And I'm going to pull up the PowerPoint. While I do that, if you want to, Michael, go ahead, add anything else that you'd like to say, and Marci, before we get started.
All right. Thank you very much, Jennifer. I want to thank everybody for joining us today, because our topic will be understanding your financial reports and how important they are in making sound decisions in your business. Thank you, everybody, for joining us today. Our topic will be understanding your financial reports. It's an important topic because it's what you will use to make important decisions in your business. And also, it might be a really important tool to help you decide to grow your business from, say, maybe a hobby to an actual business. And just as a tidbit of information, that's not in the presentation, that if you have a business and you start out and in the first 2 years you don't make a profit, the IRS may declare during an audit that your business is no longer a business, that is an actual hobby, because you haven't had any profits. Just something to be thinking about as you go and look at your business and try to grow it. So let's go to slide number 2 there. Thanks. And these are just some of the concepts we're looking for you to acquire today. We're going to talk about different reporting tools, best practices that are available to small businesses, and of course, why you really want to use these tools in your business. Next slide, please. Thank you. So the important part of understanding your financial tools, the reports, is knowing your profitability. Because it's important to know if you're making a profit or not. You want to be able to forecast growth. These tools will help you do that. As you're doing it, you'll be able to make decisions on, should I add a new product line? Do I need to reach out to new markets? Do I need to diversify? And also, am I ready for a loan based on what my reports are telling me? So we're going to go to the next slide. Thank you very much. So we're going to start out by something that you don't think about a lot, but all businesses start out a year with a budget. Small businesses should create budgets just as much as big businesses create budgets. It helps create a game plan that you have in place that will help you make decisions as you go out throughout the year based on that budget. So the next slide, please, there. So kind of looking at your budget, you're going to create a budget, excuse me, and you're going to have categories. You're going to have income, sales, expenses. How do you attract those expenses? And in that budget, how does it help with your business decisions? So we're going to go to the next slide. So here is a sample budget that you might create. And I'm just going to deviate a little bit away from this. Say you're in a restaurant. So besides rent, utilities, telephone, you're going to have food categories. And you might break those food categories down into certain product lines, because you want to keep track of where your sales are coming from based on those product lines. So you make sure you order enough inventory, which is an expense, to create those sales. So it's important that your budget categories match what business you are in. So this is just a sample, and you can change it to match what your business looks like. So we go to the next slide.
And I don't know how these lines are coming up on the presentation. That's very odd. I thought maybe Michael was doing that.
Well, it's not me. I was like, I'm looking at the one I sent to Rosie. It's like, oh, there's no one there now all of a sudden.
Okay, now it's gone. That's very odd, but continue.
It's like you were just trying to throw me off a little bit with that line.
I was making sure everybody's awake.
So, bookkeeping is an important component of the entire process. I can't tell you how much bookkeeping will affect all your decisions and all your output. The old adage, garbage in is garbage out. It's the same thing with bookkeeping. You need to make sure you have good records and good information. Make sure you organize it because at certain points in the time, you're going to give some of this information to other professionals. I can tell you I do volunteer income taxes, and we do small businesses in certain aspects. And I can tell you with small business owners that come in that are organized, we can do their taxes efficiently for them and do a great job. And for those who come in with a shoebox of receipts, I send them back home and I say, you have to do some bookkeeping for a tax preparer or a bookkeeper or a CPA when you get to that level to be able to do other reports for you so you can make good decisions. So,
Michael, is there a special app or a special program that you would recommend? Is the bookkeeping out of a straight old book, is that going to work too?
It can be multiple different formats. I would recommend researching software. I'm not going to make a recommendation on software because there's so many different programs out there. You probably can find some that give you basic business bookkeeping software that does not cost anything to, of course, very expensive, intricate software. It really depends upon your business and how much you can budget for it. If you're starting out and you're going to be running a retail store, and have inventory, I would suggest that you want to make sure you have a point of sale system for your inventory tracking, then a more updated software to make sure you keep track of, your cost of goods sold, what lines are selling, your expenses. So that way, when you get to the point where you're going to turn that over to a bookkeeper or a CPA, they're able to do something for you in an efficient, timely manner because the more disorganized you are, the more they're going to charge you. Hate to say that, but everything is a time cost to benefit for yourself. And so the more organized you provide that professional, less time it's going to take, you're going to save money in that aspect. People don't think about that, but it does affect that. So let's go down to the next slide, please. And so here are 10 basic bookkeeping steps. Of course, the software question. A lot of times I tell folks, have a separate business checking account for your business. Treat it as separate from your personal accounts because you need to keep that separation away. Even if you're sole proprietor, I would have a separate account and maybe a DBA that runs underneath my own name for taxing purposes, but it also keeps the separation away of my personal life from my business life. A lot of folks don't do this anymore. Make sure you balance it. It's a hard discussion when you don't keep track and all of a sudden something happens to your balance in your checking account. Track your sales. I worked in retail and in the food industry in my prior career before the bank. I will tell you, it was key to keep track of I worked for Woolworths, Fives, and Dimes. We kept track of all the departments and all the sales inside those departments. We knew in pet sales, our top 10 sellers in that. So if we needed to know that Goldfish, Fish Food, and Hamster were the top 3 sellers, we had notes of how much we were selling and when to make sure we kept track of that inventory. Are you looking for the slide there, Jennifer? Oh, you're okay. I'm sorry. Deposit all sales and track all sales. When I say deposit all sales, make sure you deposit all cash sales, credit card, and check. Make sure you deposit everything. That's an important aspect because when you get farther down the line and you go into somebody who's going to look at your financials and make decisions about that, and you say you want to have a loan. And I had this happen to me many, many years ago. I had someone coming in and said, hey, I would like to do a loan for my store. And I said, okay. And I looked at the records and I looked at the bottom line, and they didn't have any profits. They were like $500. And I asked the hard question, is this all you have for sales? And they said, no, they had cash sales that they weren't doing depositing the right way. And I said, I can't help you to do a loan because you did not report all your sales. Because the financial institution's going to pull up your IRS records for your business, and they're going to look at that. And if you give them a second set of books that doesn't match what you've reported to the IRS, that is going to be a critical failure, and they are going to decline based on that. So the next slide there. Remember to write business checks for business expenses. Again, make sure the personal part of your life is away from your business. When you get to the point, obtain a separate business credit card. Always remember to pay your business expenses first. Don't forget to make sure you set money aside for taxes, because that's a business expense. A lot of business owners get to the bottom and they forget that they need to set aside money for taxes, and they get into trouble at the end of the year because they didn't make quarterly payments, because they were just going to make one big payment and they needed to make quarterly payments, and they have a penalty for the end of the year. Kind of just rule of thumbs things here I'm going over for you. And remember, when you're self-employed, at your end of your PNL, your profit and loss, whatever you have for your profit is available for your owner's draw after you've taken that tax money out. So remember, you're paying yourself after everything else. All right. So financial management software, it's easy to use and organize when you use it as a daily accounting task. It helps you create reports. Some of it will create reports for you without needing a CPA. Some of it you want to have a CPA to look at just to make sure you're doing it correctly. The software is something that will help you determine the health of your business. Are you profitable? Are you negative? What things can you change to help yourself out? Don't create a paper track for yourself. A lot of people like paper, but nowadays you can put it on the cloud. And if you're going to put it on paper, I'm just going to remind you, please make sure you have it destroyed in a way that nobody can recreate your information, because it's nothing worse to hear than I threw out some financial reports that had all this information, and then I had theft. You had identity fraud because pertinent information was in those records. So today we're going to talk about next slide there. 3 of the financial statements that can help you the most. First one will be the balance sheet. Then we're going to talk about cash flow projection, and then profit and loss, because that's the funnest, because that's when you know if you made money. All right, so we're going to start out with the balance sheet. Slide 12. And so the balance sheet, I tell folks, is a picture of where you're at on a single day. Oh, I'm sorry, I've jumped too far. Slide 12 is, the financial statements can tell you, can your business generate cash flow? Where's your cash coming from? Are you getting more cash sales than credit cards? Is your cash coming from, if you're in a restaurant, is it, product lines with steak? Is it seafood? I always told folks, we serve liver in the restaurant that I worked at a long time ago. And I don't know if many restaurants that serve liver anymore because it's something that's not part of our palate anymore. Are you using your cash wisely as it's created? Again, I'll take a interesting statement from my restaurant career. I had a manager of a restaurant who ordered 6 months of cooking oil because he could buy it for $1 off a case. And I asked him, I said, why are you using your cash? He said, because I bought enough that for January and February, when our cash flow is not as strong, I will have something that will not need to be bought. So it will be paid for, and it will be, part of our inventory to use, but it's not going to have any negative cash flow for us. Then, of course, the reports will tell you, are you capable back of paying loans? Are you able to take on debt? Again, are there trends? If you got in a restaurant, you want to know the trends on your menu. So this will help you track those trends. Again, like my days in Woolworths, we could tell you the top sellers in each department and know how much inventory we had or what we needed to order to make sure we kept it as a top 10 seller. Again, are you profitable? And, the important thing is I tell folks, we're in inventory critical businesses like retail, the restaurant, how often do you turn your inventory over? What is that rule of thumb? That you can research that. It will tell you to be successful how many times you need to turn your inventory over. Very important. All right, so we're on the next one, please. Thank you. I just got to have a little ahead of myself here. Balance sheet is
before you move on, just a quick question from one of our participants.
Yes.
Will we be distributing this PowerPoint out?
Yes, Rosie, I believe just like the last one, Rosie will make it available to individuals if they'd like to have it.
Okay, so yes, to answer your question, they will have the PowerPoint emailed out to you so that you have all of this. I know it's a lot of information that you're probably trying to jot down real quickly. Not to worry, just take a few notes and then we'll get this out to you. Okay, go ahead, Michael.
All right. Mike, should she go on to the next slide just so they can see a picture while you're talking?
Yep.
All right, there you go. Thanks.
Yeah.
Good point, Marci. So the balance sheet, as I was saying, I got ahead of myself, is that specific snapshot of what the business looks like. It provides helpful information. You list out your company's assets, your liabilities, and your owner's equity. It just gives you a point and snapshot, and you do this all the time to see where you're at. So we can go, so you see that what a sample one looks like there. Of course, you just saw on page 14. So we'll go to 15. So here's another example, a more intricate snapshot of a balance sheet on it. And because this is a snapshot of a business that is not open to its doors, you notice that it doesn't have accounts payable. It doesn't have taxes payable and other liabilities. As you go about, those numbers are going to start changing. All right, now I'm going to turn it over to Marci. And from us. So there you are.
Thank you. Yeah, so, and I might change around a little bit what I'm saying, but just kind of big picture and just listening to what Mike is saying is that the bookkeeping is very important. And I think if it were me, I would probably, before I started a business, consult with a local accounting or bookkeeping firm on the software. And obviously that software and those components are what builds all of these financial statements. The balance sheet that Mike just mentioned, the P&L and the cash flow statement. So when you asked about the software, I was going to chime in, but I do think if I were starting a business, I would choose a CPA firm or an accounting firm to help me with the establishment of those, of picking that software and the establishment of that process. And then if you can back up for just a minute on the slides, I want to go back to that first opening balance sheet for just a minute.
That was 14. There you go.
Yeah, so all of this, fits together. And when you start a business, you're going to have assets. And I just want to make sure we're pointing that out, that, your assets are going to be things like the cash, that you contribute to the business, and the equipment that you buy, and inventory that you buy. So those are assets that your business owns. And then the owner's equity category is the money that you bring as an individual owner to the business. So in this example, they have $55,000 of assets, and they have contributed $35,000 to purchase those assets. And then in this case, they have a loan, it appears, $20,000 that finance that. So a balance sheet, as Mike said, is a point in time. Usually you'll see those labeled with a date, end of a month or end of a year. And so then go on to the next slide, please. And there's an example. You can see some other categories that are part of a balance sheet, which includes accounts receivable, a little bit more specific listing of equipment versus, let's say, computers or office equipment, and then a little better description of your debt. So I think the balance sheet's a very important piece to understand. So I just wanted to take just a minute and spend a little bit more time on that. And so then whenever you have accounting software, when somebody says, well, give me your financial statements, it is usually referencing the combination of a balance sheet and then, next slide, the profit and loss statement. So the other way you will hear a profit and loss statement referenced is it's also called your income statement. So your financial statements are your P&L and your balance sheet. And so the profit and loss statement is a statement that measures a time period. So versus a balance sheet, which is saying, here's where I'm at a point in time, a profit and loss statement will measure a length of time. So normally it's measuring a month, a quarter, or a full financial year. So as it says here, it's measuring revenues and expenses over a period of time. And the goal of the profit and loss is to tell you whether or not you made a profit. So next slide, please. It does say here that it is the most important report, and ultimately, when you are applying for a loan or looking at financing, I will say that the profit and loss, the net profit of the business, is probably the main, driver or main component of looking at a loan application, because that tells a bank if you are, having a successful, viable business that's making a profit. So it is a very important statement. So next slide, please. So to get into the nitty gritty of a profit and loss, and Mike, talked about this a little bit, but the basic formula of a profit and loss statement looks as we have laid out here. You take your sales, and those sales are anything that you have sold either from a cash basis, credit card basis, as Mike said, but also those are sales where you have sold on account. So maybe you sell to somebody and they don't pay you for 30 days. If you did make the sale and bill the transaction in a month, that counts towards your sales. Then what you do is you subtract out your cost of goods sold, and that's the cost of the material and labor that is related to the sale that you booked. And the net difference for that between those two numbers is the gross profit number. The next category is overhead. So overhead, you'll hear that reference, but that is your monthly expenses that are recurring. Things like rent, things like utilities, accounting fees, those amounts that you have in your original budget that recur every month are your overhead. And then finally, you get to a net profit number. And that is the number that if you are a sole proprietor or you're just running the business on your own, that is the amount of money that you have made typically for a sole proprietor prior to paying yourself. And Mike referenced this before, that the net profit number is before your owner's draw. So sometimes that's very confusing to people, and I really like to point that out, that it's important to remember that after the net profit, you still have to take out your own compensation as a draw. The other thing that the net profit number usually has to cover is repayment of loans. That's not a deductible expense, the repayment of principal. So you have to be kind of careful in understanding a profit and loss statement, and I'd like to point a couple of those areas out. On the next slide, next statement is actually an example of a P&L statement, and this is Larry's Landscaping and Garden Supply. And so in this case, you can see it says October 2011 to September 2012. They probably have a year end of September. And so this is a 12-month statement. If you had a balance sheet, it would say September 30th, 2012. It would reference where they are at the end of that date. So here you've got your income coming in. This is a landscaping company, and throughout the year they did $65,000 in sales. They booked their cost of goods sold, which was probably some landscaping supplies, and then they have their expenses. And at the bottom, they have generated a net income of almost $15,000 a year. Now, if you look up above that, you've got payroll expenses of $37,000. In this case, it's likely that those are Larry's employees, and that Larry's personal income is the net income number of $14,740. So you can see the different expenses that we mentioned in there. And so this is a good example of what your P&L statement should look like. Next slide. So the third statement that we like to talk about, so you have a balance sheet, you have a profit and loss statement, and those are very well known in typical financial statements, but a very important statement that you should always consider preparing is actually a cash flow statement. So when you look at a profit and loss statement, that is referencing accounting where you're, as I said, you're booking sales over the course of the month, even if you haven't collected that money. So if you aren't owed for 30 days on your accounts receivable, and you also have to pay for things in inventory, Mike talked about this, where the timing isn't the same again as the sales cycle. So you might have terms where you're paying your creditors 30 days and 60 days out. So a cash flow statement takes those timing differences into account. And it's really, I really liken a cash flow statement to the equivalent of your checkbook, because what you're actually doing is just taking your starting cash, projecting your receipts, and then subtracting out your expenses, and you do that over the course of time to come up with an ending cash position. So next slide, please. So the reason that I like the cash flow statement, it says you're using assumptions to project your cash in and out. We'll show you an example here in just a minute. Is that in the end, it's going to show you when you might run short in cash, when you might have an excess. And ultimately, the reason you need that is you need to find out if you need a loan. And you may need a line of credit, and you may need a term note, depending upon what your cash flow projection shows. And a line of credit is typically used for short-term needs for cash in and out of your business. And a term loan is typically used when you are making larger purchases for things like equipment or vehicles or computers, things that you're going to use over time. They tend to be larger in nature. And really, that's what you want to look at when you're thinking about looking at a loan and talking with a bank, is looking at your cash flow projection and what's causing some of the cash needs. So if you go on to the next statement, the next slide here. I already mentioned some of the things that this cash flow projection is helpful for. Because primarily I work in the loan area, so I look at it from a loan standpoint. But it also will help you look at areas that you need to massage or fix or be aware of. It gives you an opportunity to say, what do I need to sell every month in order to make my cash flow positive and make sure that I am over my break even. And again, it helps to plan for equipment purchases. And then if you do have a seasonal business, it is very helpful to plan for your inventory needs. So next slide. So I don't know if this can be blown up. And as we've already said, we're going to be sending out this this PowerPoint. But the format that you want to use when you're looking at a cash flow projection is very simply, starting with your opening balance of your cash, or how much cash is in your checkbook. And then you would log in, what are my cash sales? What am I collecting on accounts receivable? Not what am I billing, but what do I plan on collecting this month? And that will give you your cash available. And then as you look at what cash is available for the month, then you would subtract out, what am I going to spend this month in my operating expenses? So the next category is your expenses. And then down below, that brings you down to a net cash position before other uses of cash besides normal operating expenses. So here's where you take into account your bigger items, which might be debt service on a loan. It could be equipment purchases, as I mentioned. It would be your owner's draw. It would be new inventory purchases. And then at the end of the month, it'll tell you what your net cash position is. So next slide, please. So I'm going to come back to this. If you would go a slide or two out, please, and show the larger example. So here's a cash flow projection. And what I really love about the cash flow projection is so now you're doing your opening month, which I just described. But what you really want to do is do this projection out for 12 months. So what you do is you take your ending cash after the first month, and that becomes your beginning cash of the next month. And you just continue this out and do your projection out for 12 months. And so that cash position at the bottom of the page, the ending cash, that tells you where your needs are. Because if that number is a negative, that means you either need more cash contributed to the business, or you need access to a line of credit or a loan. So this is an example that I think when we send this out, people certainly can utilize this and I guess fine tune it for their business. But I really think that if you're starting a business, while the bankers like to look historically at profit and loss statements and balance sheets, the cash flow projection is probably the most important that you can utilize, at least in starting the business. And so in this example, what you can do, if this is in a spreadsheet format, is you can kind of play with the numbers. So in this case, you can see where at the bottom, the first 1, 2, 3, 4, 5 months, they actually are running in a negative cash position. So up at the top, you can see where there's nothing in the equity contribution line. So look at I guess it's the 6th line. Whoops. So what this tells me, just by looking at this, is they need to put some additional cash in the business up front to make sure that they survive the first handful of months that they're operating. It looks like down the road, they take a nice turn and the business is generating a positive cash flow. So if you go back a couple pages, you can also use the cash flow projection to massage things that perhaps you say, oh gosh, I don't have the cash for that. So what am I going to do? Well, you either have to do things like increase the items sold, reduce the expenses in the categories, or find ways to change the timing of expenses. Maybe you can get some extended terms on inventory or something along those lines. So it's really a very important spreadsheet to work with and fine tune. So that's an awful lot of information. I'm glad to know that we're sending out the PowerPoint so that people can kind of go through this and study this and think a little bit about, how it applies to their situation. But for now, that's what I have to say on these financial statements. We'd love to take questions and, see if there's any questions that any of the participants might have.
Yeah, so if you want to ask any questions, if your audio works, this is your time. You're getting some wonderful advice from the experts right now, so I encourage you to ask any questions that you may have.